Hi, I'm Robert Maltbie. Welcome to Maltbie's Minute on the Market in May. Should you sell in May and go away? Yeah, maybe partially, particularly with high duration, high multiple stocks. We have had over the last month or two a real push-pull between growth and value, a rebound in growth, and the big cap tech after a large sell-off, and a real push-pull, valuations versus the reopening trade overall. Net, we're at a level where we're also discounting likely the very positive earnings estimates and results in this quarter, which are terrific, up 25% better than expected, and then growth expected next quarter. Again, another stellar quarter. The market is apparently looking beyond that and to what comes next, pondering more in focus the administration's initiatives with tax increases, Green New Deal, or just, let's say, for example, fiscal and monetary maneuvers here. One apparent fear is tapering. Will the Fed take the pedal off the metal, the foot off the pedal, and not be stimulating every month the way it is now? That is likely the first move the market is trying to digest right now. So, very, very, very serious situation with de-risking, we've reduced our portfolio multiple significantly. We've tilted more towards value with exposure to materials and financials that should benefit from this environment, with potentially the level of rates going higher. This is against the backdrop of a recent unemployment report that was very disappointing. The expectation was for maybe a million new jobs created. In fact, it was a quarter of that. The blame is on the COVID-19 emergency checks. People are getting paid enough to where they'd rather be at the beach like this, like me, relaxing in the sunshine. Everything's taken care of, no worries. And with that extra incremental check, invest in Dogecoin or something like that. So the stalemate should be resolved, possibly on lower prices overall. So you have to be very cautious in here. Our indicators still are bullish, but with an asterisk. Correction expected, particularly to continue in the higher multiple stocks. Now, will this unemployment report that's disappointing change the picture? It very well could. At this point, we don't know if it'll lead to more wage inflation, higher wages to draw these employees back that are getting these fat checks, or a wait and see until those checks run out in several months, or are we looking essentially towards the deferral of the taper? In other words, allowing that taper to continue. That is kind of the neutral position we find ourselves in right now. Meanwhile, we have launched at Singular Research on Coinbase. We are one of the early firms to do this. Coinbase came public. They're the 800-pound gorilla in the Bitcoin, in the cryptocurrency space. They make money regardless, really, of the cryptocurrency du jour, and well-positioned, growing at very high rates. We expect them to grow at 50% over the next 5 years minimum, and at these levels, we believe, with Coinbase discounting that growth and allowing for insiders to sell, and lacking research coverage because this was not an IPO, it was a self-registered deal for sellers only, so very unique there. We expect Coinbase at these levels for the selling to subside. It's over 60% of the shares outstanding now, and it's prime, we think, to start bottoming and making that move higher. Our price target is in excess of 400, and with Coinbase at 250, 260, lots of growth ahead. Great company to look at, very dominant in a very exciting growth environment with cryptocurrencies. So that's the report. I don't know, I might stay here a bit longer. It depends when the support checks run out, but likely not. Likely to get back to work Monday. This is Robert Maltbie reporting from the beach. Maltbie's Minute on the market.